There are two types of people in the world: those who work for money their entire lives, and those who make money work for them. Right now, in January 2026, while you are working 40, 50, 60 hours per week to pay your bills, there are people who have not worked a single day in 5 years, and they are getting richer every single day. Not because they won the lottery, not because they inherited wealth, but because they built the right assets. Assets that generate cash flow while they sleep. Assets that compound over time. Assets that free them from trading hours for dollars. And here is the brutal truth. Most people will never build these assets because they are too busy working, too busy surviving, too busy believing that trading time for money is the only path to security. But in 2026, with AI automating millions of jobs, with inflation at 3.7% silently destroying savings accounts, with the average American needing to work until age 67 just to retire broke, the old game is over. Working hard is no longer enough. Saving money is no longer enough. You need assets, real assets, the kind that generate passive income, the kind that build generational wealth, the kind that make you rich enough to never work again. Before we reveal the 8 assets that the wealthy use to escape the 9-to-5 forever, and show you exactly how to start building them, even if you are starting from zero. Right now, hit that subscribe button and join the Wealth Forum. We break down how the rich actually get rich so you can do the same. Turn on notifications, because in the next 16 minutes, you are going to learn what most people spend their entire lives never discovering. That wealth is not about working harder, it is about owning the right assets. Now let's talk about why most people stay poor, and what the wealthy know that you do not. Robert Kiyosaki, the author of Rich Dad, Poor Dad, explains it perfectly through what he calls the cash flow quadrant. On the left side, you have employees and self-employed people. They trade time for money. They work for security, and security keeps them trapped. On the right side, you have business owners and investors. They build assets that work for them. They work for freedom, and freedom gives them time. The difference between the two sides is not intelligence, not education, not even luck. It is ownership. The wealthy own assets. The poor own nothing but their time. And time runs out. Here is the reality of 2026. The median household income in America is $78,000 per year. Sounds decent, until you realize that after taxes, housing, food, healthcare, and childcare, the average family has $3,200 left over at the end of the year for savings and investments. That is $267 per month. If you invest $267 per month at 8% returns, it takes 35 years to reach $1 million. You start at age 30. You are a millionaire at age 65, right when your body is breaking down, right when you should have been enjoying life. And that is if everything goes perfectly. If you never lose your job, if you never have a medical emergency, if inflation does not destroy your returns, if the market does not crash right before you retire, that is the employee path. That is the left side of the quadrant. Work until you die, or die broke trying. Now contrast that with the right side. A person who builds a business or buys rental real estate or invests in dividend-paying stocks at age 30 can be financially free by age 45, 15 years versus 35 years. And here is the key difference. The employee works hard for 35 years and stops working at 65 with $1 million. The asset builder works extremely hard for 10 years, then moderately hard for 5 years, then barely works at all for the next 20 years while the assets compound. By age 65, the asset builder has $10 million, not 1 million, 10 million, because assets compound, time compounds, and freedom compounds. This is not theory. This is math, and the math is brutal for anyone still on the left side of the quadrant in 2026. With AI, automation, and globalization, jobs are less secure than ever. With inflation and currency debasement, savings are worth less every year. The only path to real wealth is assets. Period. Now let me show you the 8 specific assets that make people rich enough to never work again. Asset 1 is a business, and this is the most powerful wealth-building asset in existence. Every single billionaire on the planet built their wealth through owning a business. Elon Musk with Tesla and SpaceX, Jeff Bezos with Amazon, Mark Zuckerberg with Meta, not by working jobs, by building businesses. In January 2026, there are 735 billionaires in America. 0 of them got there by being employees, because businesses scale. A job does not. If you work for someone, you trade 1 hour for 1 paycheck. If you own a business, you build a system that generates revenue 24/7, whether you are working or sleeping. And in 2026, starting a business is easier than ever. You do not need a physical storefront. You do not need inventory. You can start online businesses with near zero startup costs, dropshipping, digital products, software as a service, consulting, coaching. The barrier to entry has never been lower. But here is the catch. Most people never start because starting a business requires risk, requires failure, requires working nights and weekends while keeping your day job. But the payoff is worth it because a successful business can produce more income in 1 year than 20 years of employment. And it can be sold for a multiple of its annual profit, creating a massive payday that no job will ever provide. Asset 2 is real estate, and this is how the middle class becomes the wealthy class. In January 2026, the median home price in America is $428,000. Sounds expensive. But here is the secret. You do not need $428,000 to buy a $428,000 house. You need $85,600 for a 20% down payment. And that down payment controls an entire asset. This is called leverage. If the house appreciates 5%, you do not make 5% on your $85,600. You make 5% on $428,000. That is $21,400, a 25% return on your initial investment in 1 year. And if you rent the house out, tenants pay your mortgage. You build equity, you get tax write-offs, and you collect cash flow every single month. Repeat this 5 times and you have 5 rental properties generating $3,000 per month in cash flow. That is $36,000 per year. After 15 years, the mortgages are paid off. Now those 5 properties generate $100,000 per year for the rest of your life without working. This is how firefighters and teachers and nurses retire wealthy, not through their salaries, through real estate. Asset 3 is paper assets. Stocks, bonds, mutual funds, ETFs. These are the easiest assets to start with because they require no time and no special knowledge, just discipline. In January 2026, the S&P 500 is near all-time highs, and despite crashes in 2000, 2008, and 2020, the S&P 500 has returned an average of 10% per year over the past 50 years. If you invest $500 per month starting at age 25, by age 65, you have $3.2 million just from index fund investing. No stock picking, no timing the market, just consistent contributions and time. But here is why most people fail. They stop contributing during crashes. They panic and sell at the bottom. They try to get rich quick and lose everything. The wealthy know that paper assets work only if you stay disciplined for decades. Buy when everyone else is selling. Hold when everyone else is panicking, and never sell until you need the money in retirement. Asset 4 is commodities. Gold, silver, oil, farmland. These are real assets that hold value regardless of what happens to paper currency. In 2026, with $38 trillion in national debt and $202 trillion annual deficits, the dollar is being debased every single day. Gold has risen from $1,800 per ounce in 2020 to nearly $5,000 per ounce in January 2026. That is almost above 100% gain. While inflation destroyed savings accounts, gold preserved wealth. And commodities do not just protect against inflation. They profit from it. When oil prices rise, oil stocks rise. When food prices rise, farmland values rise. Owning commodities is owning the physical resources that power civilization. And as long as people need energy and food and metals, commodities will have value. Now here is where it gets interesting. The next 4 assets are time-based assets. And these are the assets most people never think about. But they are the difference between working until you die and retiring at 40. Asset 5 is time itself, and this is the most valuable asset you will ever own. Because time is the only resource you can never get back. Money lost can be earned again, but time lost is gone forever. Here is the crisis. The average person wastes 10 to 15 years of their working life. They work a job they hate from age 25 to 40, telling themselves they will start a business someday. Someday they will invest in real estate. Someday they will take the risk. And then they wake up at 40 with no assets, no passive income, no options. And they realize they wasted the most valuable years of their life playing it safe. In 2026, someone who starts investing at age 20 will have twice as much wealth at age 60 as someone who starts at age 30, even if the person who started at 30 invests twice as much money. Because compound interest rewards time more than money. Warren Buffett made 99% of his wealth after age 50. Not because he started investing at 50, But because he started investing at 11 years old, he gave his money 60 years to compound. That is the power of time. And that is why wasting your 20s and 30s working a job you hate without building assets is financial suicide. Asset 6 is your health. And this one surprises people. But your health is your most valuable financial asset. Because without health, you cannot work. You cannot build businesses. You cannot enjoy wealth. In 2026, the average American spends $13,000 per year on healthcare costs. And chronic diseases caused by poor diet, lack of exercise, and stress cost Americans $4.1 trillion per year in medical expenses and lost productivity. If you smoke, drink heavily, eat junk food, and never exercise, you are destroying your most valuable asset. You are guaranteeing that even if you build wealth, you will spend it all on medical bills, and you will die young. Wealthy people understand this. They invest in personal trainers, nutritionists, preventive care, not because they are vain, but because health is wealth. A healthy 65-year-old can work, can travel, can enjoy their money. An unhealthy 65-year-old is bedridden, dependent, broke. Your body is an asset. Treat it like one. Asset 7 is online assets. And in 2026, this is the biggest opportunity for regular people to build wealth from zero. YouTube channels, blogs, social media accounts, online courses, digital products. These assets cost almost nothing to create, but can generate millions in revenue. In January 2026, there are over 300,000 YouTube channels earning more than $100,000 per year. Some earn millions. Mr. Beast earned an estimated $85 million in 2025, not from working a job, from building an online audience. And you do not need millions of subscribers. A channel with 50,000 subscribers in a profitable niche can earn $5,000 to $10,000 per month from ads, sponsorships, and affiliate commissions. That is financial freedom. From creating content, the best part, it costs nothing to start. You already have a phone. You already have internet. You already have knowledge that someone wants. The only thing stopping you is fear. Fear of judgment, fear of failure, fear of looking stupid. But here is the truth. Every successful person you admire started exactly where you are, scared, uncertain, with 0 followers. They just started anyway, and 5 years later, they are financially free, while everyone else is still working 9 to 5. Asset 8 is your network. Who you know determines what opportunities come your way, and opportunities create wealth. In 2026, the wealthiest people in the world are not the hardest workers. They are the best connected. A single introduction can lead to a business partnership worth millions. A single recommendation can land you a job paying $500,000 per year. A single connection can get your product in front of 100,000 customers. But networking is not about collecting business cards. It is about building real relationships, helping people, providing value, being someone others want to work with. When you build a strong network, opportunities find you, investors find you, customers find you, partners find you, and wealth follows. Most people spend their entire lives working alone, competing instead of collaborating, hoarding instead of sharing, and they stay broke. The wealthy understand that your network is your net worth, and they invest in relationships as aggressively as they invest in businesses. Now here is the revelation. These 8 assets work together. A person who builds a business and invests the profits in real estate and stocks while building an online audience and taking care of their health and expanding their network is unstoppable. They create multiple income streams, multiple paths to wealth, and multiple safety nets. If one asset fails, 7 others keep them wealthy. This is how the rich think. Not one path, 8 paths, all working simultaneously, all compounding together. Here is what happens when you build these assets. First, you replace your salary. Your passive income from businesses, real estate, dividends, and online assets exceeds your expenses. You no longer need your job. You work because you want to, not because you have to. This is financial independence, and it changes everything. Second, time freedom follows money freedom. When you do not have to work, you can spend your time however you want. You can travel. You can pursue hobbies. You can spend time with family. You can start new businesses just for fun. You can volunteer. You can do nothing. The choice is yours. And that choice is the definition of wealth. Third, generational wealth becomes possible. Assets can be passed to your children. A business can support your family for generations. Real estate can provide income for your grandchildren. Stocks and bonds can fund trust funds. The wealthy do not just build wealth for themselves. They build wealth that lasts beyond their lifetime. This is how families like the Rockefellers and Rothschilds stayed wealthy for over a century. Not through jobs, through assets. But here is the consequence of not building assets. You work until 67, maybe 70, maybe until you physically cannot work anymore. You retire on Social Security, which pays $1,900 per month on average in 2026. That is $22,800 per year, below the poverty line. You depend on your children. You cannot afford healthcare. You cannot travel. You cannot help your grandchildren. You die broke, and you leave nothing behind. That is the fate of 90% of Americans. Not because they did not work hard, but because they worked for money instead of building money-generating assets. So what do you do right now? First, pick one asset, just one. The business asset if you are entrepreneurial. The real estate asset if you want passive income. The online asset if you have knowledge to share. Pick one and commit to building it for the next 12 months. Second, invest 10% of every paycheck into paper assets, index funds, ETFs, retirement accounts, automated, non-negotiable. Third, protect your time and health. Say no to time wasters. Say no to junk food and alcohol and cigarettes. Your body and your time are your most valuable assets. Treat them accordingly. Fourth, start building your network today. Reach out to one person per week who is ahead of you. Offer value. Ask questions. Build relationships. And fifth, never stop learning. Read books. Watch educational content. Take courses. The wealthy invest in knowledge because knowledge creates opportunities, and opportunities create wealth. So here is the lesson. Wealth is not about working harder. It is about owning assets that generate income without your labor. Every single wealthy person you admire got there by building the 8 assets we just covered. Businesses, real estate, paper assets, commodities, time, health, online assets, and network. You do not need all 8. You need 2 or 3 done extremely well. And you need to start today. Not next year. Not when you have more money. Not when the timing is perfect. Today, in January 2026. With AI eliminating jobs, with inflation destroying savings, with the cost of living exploding, the old path of work hard and save money no longer works. The only path to real wealth is assets, and the only time to start building them is now. Because 10 years from now, you will either look back and thank yourself for starting today, or you will look back and regret that you waited. Subscribe now to the Wealth Forum for continued breakdowns on how to build real wealth in the modern economy. Turn on notifications. Share this with anyone stuck in the 9 to 5 who wants out. But before you go, leave a comment. Tell me this. Which of the 8 assets are you going to build first? Business, real estate, online? Or are you going to keep working for money instead of making money work for you? Because I want to know who is actually going to take action and who is going to stay on the left side of the cash flow quadrant forever. The 8 assets are right in front of you. The question is whether you will build them or spend the rest of your life wishing you had.